Welcome to a video demonstration on the use of QuickProConsultant, abbreviated and referred to as QPC in the following narrative. QPC offers a powerful, user-friendly dashboard application that uses your company's QuickBooks accounting data to analyze trends in key performance indicators and create what-if financial scenarios. QPC will enable you to set and monitor financial goals as aids to achieve greater financial success for your business. After seeing this video, you may subscribe to the QPC service by clicking on the subscribe button. For more details and to obtain a copy of this video, visit the QPC website. Please follow the cursor as we narrate the features of the QPC application. We will begin by opening the Help page and clicking on the Disclaimer tab. Please take a few minutes to read our disclaimer before proceeding. Next, open the Decision Making page. Financial Management Basics is a short summary of financial management terms that will be examined in more detail later under the Financial Management tab. Investment capital is defined as equity plus debt. Investment capital is converted into assets from which sales are generated. Sales generate profit after taking into account costs, expenses, interest expense, and taxes. QPC enables you to examine financial parameters including key metrics, or KMs, and key performance indicators, or KPIs. By mapping your company's QuickBooks accounting data to these financial parameters, QPC provides time-based trends in KMs and KPIs to help you analyze your current business financials. Through its dashboard feature, QPC enables you to create financial scenarios based on KPI and budget projections. The Financials and Drill Down fields under the Trend Analysis page enable you to display and analyze KM trends over selected time periods. KM trends are compared to help you define the KPIs critical for financial planning in your business. What-if scenarios are created from projections for critical KPIs. Monthly Planning and Income and ROE tabs have subtabs that enable you to run what-if scenarios for cash flow planning, working capital planning, operating income planning, ROI, and ROE. There is also a budgeting subtab under the Monthly Management tab that enables you to run what-if monthly budget scenarios from projections in your revenue and expense accounts. Later in this video, we will explain in detail how to run KPI projections for the month or year following any previous base month or year. A summary of the steps is as follows. Select a KPI for what-if analysis. For example, working capital, cash flow, operating income, or ROE. Use a slider bar to enter a desired KPI target number. Create what-if scenarios using a slider bar to enter and test key metric numbers for their effect on KPI projections as displayed on a dashboard gauge. Compare this what-if projection with the KPI target number. View KM's projections on a bar chart and compare them with the base month actual number. View their impact on the KPI number on a KPI gauge. Use what-if scenarios in decision making. Formulate business plans by selecting the most favorable what-if scenario for setting financial goals and a monthly budget. Evaluate financial performance by periodically monitoring KM and KPI trends. Create new what-if projection scenarios periodically to alter business decisions and to formulate new financial goals and budgets. Next, open the Financial Management page to obtain more details on some basic terms of financial management. The numbers shown here and throughout this video are calculated from accounting data provided by QuickBooks for a fictitious or dummy company. In this example for year 2011, profit margin is defined as net income divided by sales. This gives a profit margin ratio of 0.28, shown here as 28%. Asset turnover is defined as sales revenue divided by assets to give an asset turnover ratio of 0.373, shown here as 37.3%. The profit margin ratio multiplied by the asset turnover ratio gives a return on investment ratio of 0.103, shown here as 10.5%. Financial leverage is defined as assets or total capital divided by equity to give a ratio of 5.3. The return on investment ratio multiplied by the financial leverage ratio gives a return on equity ratio of 0.56, shown as 56%. Ratio analysis uses the KMs listed under the 4 categories shown here: profitability, activity, liquidity, and financial. There are many more ratios that may be used as required. Profitability has 3 KMs: gross margin, operating margin, and net margin. Activity has asset turnover as a KM. Liquidity has 2 KMs, current ratio and quick ratio. Financial also has 2 KMs, debt to capital ratio and interest coverage ratio. Of these financial metrics, ROI and ROE are critical key performance indicators for which projections can be obtained using the QPC application. A more detailed discussion of financial management may be found on the website link shown below.